For the first time in history, the S&P 500 is approaching the 7,000 level. Quality US stocks at huge discounts. Massive $4.5 trillion. Deal-making boom. The US stock market is quietly approaching a historic level. Trillion-dollar decisions are being made behind the scenes, and some of America's strongest companies are suddenly on sale. This week's finance news could directly affect your money, whether you invest or not, and most people won't realize it until it's too late. So let's break down the 3 biggest US finance stories this week simply, clearly, and without the Wall Street nonsense most people can't stand. Why you should care. These aren't just headlines for traders. They affect your future investments, your job market, interest rates, and where smart money is moving right now. So watch till the end. The third story might surprise you the most. Story 1. S&P 500 near a historic level. For the first time ever, the S&P 500 is approaching the 7,000 level, a number that would have sounded impossible just a few years ago. 500 tracks the 500 largest US companies: Apple, Microsoft, Amazon, Google, basically the backbone of the American economy. And right now, despite inflation worries, interest rates, and global tension, the market keeps climbing. What's really happening? But here's the interesting part: this rally isn't just tech anymore. Money is quietly rotating into financial stocks, healthcare, industrials, and even small cap companies. That tells us something important. Investors aren't betting on hype, they're betting on stability. Why this matters? Historically, when markets rise with broad participation, it's healthier than when only a few tech stocks are pushing everything up. Risk reminder: that doesn't mean markets can't pull back. It means smart investors are positioning carefully, panicking, not gambling. Story 2. Massive $4.5 trillion deal making boom. While most people are watching stock prices, corporations are quietly making some of the biggest deals in history. The headline: in 2025, global mergers and acquisitions have reached nearly $4.5 trillion, the second highest year ever recorded. Simple explanation: a merger or acquisition happens when one company buys or combines with another. Companies don't do this unless they're confident about the future. Why companies are buying now? Strong corporate profits, easier access to capital, strategic control over industries, long-term growth planning. In other words, companies are betting big on the future of the US economy. Who benefits? This kind of deal-making is great news for investment banks, legal firms, shareholders, and even job creation in some sectors. Big signal: when CEOs start spending billions instead of sitting on cash, it's usually a sign they see opportunity, not collapse. Story 3. Quality US stocks at huge discounts. Now this is where it gets interesting. While markets are near all-time highs, some of America's strongest companies are trading at 40% discounts. What are quality stocks? Quality stocks are companies that generate consistent cash flow, have strong balance sheets, pay dividends, and survive economic downturns. Examples: companies like Chevron, Merck, AT&T, General Motors, Expedia. Why they're discounted? These stocks aren't exciting. They don't promise overnight riches. And because of that, many investors ignored them during the hype years. Why smart money is paying attention? Historically, quality stocks tend to outperform during uncertainty, protect capital during downturns, and quietly beat the market over time. Key lesson: this is how wealth is often built, not by chasing trends, but by buying solid businesses when they're unpopular. Final big picture: put all 3 stories together. Markets near record highs, companies spending trillions on growth, quality stocks trading at discounts. This isn't a market screaming collapse, it's a market demanding smarter decision making. The biggest mistake you can make right now is doing nothing because you're scared. Learn, stay informed, think long term. If this breakdown helped you, hit like so more people see it. Subscribe for simple, honest finance videos every week. I'll see you in the next one.